Yo, what's up, YouTube? It's Mr.BuyTheDip back here with another video, a very important video. It took me a couple days to really come to a conclusion about this video. Talk to you guys about certain stocks you need to have in your CashApp portfolio, okay? First things first, let's go to CashApp, and this is one of my recent investments in AMD. AMD is the little brother of NVIDIA, okay? And just an amazing investment I made, and I think the stock has potential to go up to 144 or 180, 190, and potentially all the way back up to 200. Probably not March, okay, but I'm saying probably June to July, okay? And as you guys can see, last year it was around 180, 190, okay? This is a stock that I want to sell around that time, 180 to 200, and take all that money from here and go back into NVIDIA, okay? But as I'm doing that, I'm buying dips as well. As you guys can see, I bought right here at 123.51. And I'm constantly doing that, okay? Now, first things first, Cash App is something I'm only going to be investing on till August. First things first, August comes around, okay? And I'm going into September, October, November, December. I'm going to transfer. I'm going to start transferring over to Robinhood. And then from Robinhood, once I hit around 1,000, 2,000, I'm going to transfer to Webull. And Webull is where the real investment, the $10,000, $20,000 portfolio is going to come to life, okay? First things first, okay? Before investing, remember these things. If you're a beginner investor, that's totally fine, okay? How about you build some new habits, build some nice just build a nice behavior of saving money, okay, starting 2025, okay? Because first things first, to be able to invest, you need to have capital, okay? So let's go through some of these features, some of these key points right here, and I'm going to dig deep and dive into some stocks you need to own, okay? First things first, holding a safe position, okay? These are fundamentals of investing, guys. I've been doing this for over almost 2 years now, okay? And the first year, all I did was I researched, I took notes, and I studied, I looked at YouTube courses, right? And I'm self-learned, okay? So holding a safe position, money you can quote unquote lean on. As you guys can see, if you look at my whole Cash App portfolio, I have $602 invested. So just take that into consideration. You need to have more than double the money you have invested safely. So based on my portfolio, anybody can infer that, okay, I have more than $1,200 in savings, or if I have $20,000 saved, I have at least $40,000 saved, okay? So that needs to be a very important part of your investment feature, and that's one of the main things about investing is risk management, okay? So first things first, money you can lean on. Now, second is understanding market trends, bull run versus bearish or downtime, okay? Now, bull run basically means when a stock is on its way up, or when things are just skyrocketing and you get 52-week highs, and when the stock is doing well, okay? Now, something that a bull run always has is it has small dips, right? But it manages to skyrocket up more and more and more. Let's look at GameStop, for example. Okay, weekly, we're up 6%. Monthly, we're up 5%. But if you look at it from about August to right now, we're up 93%, right? And I want you guys to realize you don't want to ever buy around a bull run, okay? You always want to wait for pullbacks and buy when stocks are lower, okay? Now, third thing is diversifying. If you're somebody that's just getting started into investing, you can always diversify with the ETF. However, ETF is more of a bunch of stocks put into quote unquote one stock or one thing you can buy, which is called an ETF. I don't personally like doing that. I just like to have 2 or 3 sectors that I'm investing in and get some of those big companies in my portfolio. But I only have $73 here. I'm going to go up to 100 and hold it out all the way till the end of 2025. I'm not going to put no more money into an ETF. First things first, if you're a younger guy, do not care too much about an ETF. Now, I'm not ignoring a 401k, a Roth IRA, and things like that, right? But individually investing in the S&P 500 or something like that, I mean, you could always do it because you get dividend yield and stuff like that, but really focus more on industry sectors that are growing and that have potential chances of literally exploding with the presidency we're going to have through 2025, 2026, 2027, okay, and 2028. So I'd rather do that than just investing in an ETF. But ETF is a safer way to go if you're a younger person that doesn't really know what to do and you just want to invest, right? And you don't want to spend hours and hours on charts and hours day trading, swing trading, or learning about the two-step Buffett stock market strategy, stuff like that, just take $1,000, okay, and put it around $592, okay. So right now would be a nice time to invest in the S&P 500, and that $1,000 by the end of the year is probably going to be $1,200, $1,300, right? And then start of 2026, put another $2,000, okay. So you can go with that strategy as well. But if you want to really get maximize your opportunities and maximize moments in certain companies like AMD or Nvidia, right, you need to be able to know how to invest the right way, okay. So diversifying is something you know always consider, whether that's investing in different industry sectors or whether that's just investing in an ETF, okay. Risk management, how much money are you comfortable losing, okay. Do not ever think about, oh, I have $1,000 saved up, I'm going to go ahead and put $1,000 into a stock. That is not something you do, okay? If you look at it from somebody who was younger, okay, let's say if I'm somebody who's 15, 16 years old, I don't really have to worry about losing $600, $700, right? Because I don't have bills to pay. I'm typically living with my parents, right? But if you're somebody that's older, right, you need to be able to get down with risk management. If you have $20,000 saved, okay, which is a decent amount. If you have $20,000 saved, should you throw all $20,000 into stocks just because you see, oh, these stocks are growing, let me just throw $20,000? You should not, okay, because that is not the safest way to invest. If you have $20,000, take $5,000 now, invest $5,000, the rest $15,000 you can play around with, okay. I'm not a financial advisor. I'm not somebody who has a degree in this, but I have extreme knowledge by self-learning, by looking at successful investors and learning about one of the best investors ever. For example, Warren Buffett, okay? Now, time frame. What investments are short-term, mid-term, long-term? If you look at my portfolio, I kind of have weird companies here. You see Fuel Cell Energy, you see GameStop, you see Reality Income. So why is my portfolio like this? Well, I have different types of investments. Now, I have 6 stocks I own. I'm not going to own any more stocks, okay, as long or until I don't get rid of GameStop, which was supposed to be a short-term to mid-term investment, but I got in at the wrong time, okay. So I'm waiting for this stock to pull all the way up to $37, which is close right now, okay, which is close. I'm $5 away from making profit, guys. Keep that in mind, okay. Now, if you look all the way back to down here, okay, let's look at October, November, December. Let's even look at July, August. Okay, I bought at the wrong time. Okay, so that made me just hold out this position forever and ever and ever, and I didn't start averaging down till recently. Okay, now I know this is a midterm to short-term investment because you do not want to make something like GameStop a long-term investment. It is very volatile. Okay, the stock can go up in a matter of hours and come down in a matter of minutes. Okay, so you do not want to play with investments like these, and especially if you're not even earning a dividend yield from it, and their operating margin is not even in there, okay. So we don't know how much profit the company is really making after all their expenses, okay. But their average volume is good, their daily volume is good, okay. 13 million, 10 million. Compare that to Nvidia, okay. So if you compare that to Nvidia is way more, but what you can infer from GameStop, it's a small cap stock, okay. The market cap is nowhere near as big as Nvidia. So what people do is they day trade GameStop, but you can also day trade Nvidia, right? But for me, for example, I use Nvidia as a long-term stock. Okay, you can day trade it if you want. Nvidia is volatile too, but GameStop, you can't see you're not gonna see 80-90% gain in a matter of 5 to 6 months with the stock. Some stocks don't go that much up, 93%. Okay, they don't go that much up within a year. Okay, for example, let's take Walmart. Okay, one of the most consistent stocks. I love the industry sector, okay. Year to date, it's up 72.61%. People who held Walmart are smart investors, right? Now, compare that to somebody who invested in GameStop, okay. They made more profit than somebody who invested in Walmart, which sounds stupid, right? But all it was good risk. It was a nice way to play with their profits, and that's what they did, okay. Now, next is what stocks to actually invest in. My top picks are Tesla, Nvidia, then I have Walmart, and then I have the SPY, QQQ, O, and NLY. Now I have these highlighted in different colors, okay? Tesla, Nvidia, or AMD, Walmart, these are individual stocks, okay? Individual stocks I keep on my radar. I love them, and I'm kind of in different industry sectors. Walmart is more with retail. Tesla could be with energy. Nvidia could be more with technology, right? So one of the biggest things I say is find at least 2 to 3 specific companies and use those as businesses. Think of it like this. Think of it as it's your own business. Okay, don't think of it all as just a stock I want to sell later on. If you have a real estate property, right, you want to build something on it, get cash. You want to produce cash from that. If you have a business and it's doing good, you do not want to sell it. You want to keep building cash. Think of these stocks as you want to keep gaining profit, okay? And the SPY is an ETF, QQQ is an ETF. Keep at least one of these ETFs in there. Don't put as much money. Let's say you have $2,000 into Tesla, average cost per share of $200, okay? If you look at Tesla, I was around, I was keeping track of Tesla when it was all the way down to 170, 160 something. Okay, I'm not lying, guys. If you look all the way down here, I was keeping track of this. I was looking at this, and if I would have invested here, here's where I would have made all the profits, right? It rebounded perfectly. Almost hit 500, but I'm not investing in it right now. I'm not going to invest as long as until it's not under 350, and even then I'm going to average down. Okay, so keep that in mind, right? Keep that in mind, and keep this industry sector in mind. Vehicles, energy, right? It goes in with the robot stuff, right? So Elon Musk is a CEO who has a major hand with Donald Trump. Okay, all the rallies you see him in, all the speeches, you see Elon Musk around him. Whenever he's doing a new project, Donald Trump is somewhere around him. Okay, so this stock is going to grow efficiently in the next year or so, and what you need to be able to do is get in somewhere around here, 350, 360, sub 400, right? Somewhere around there is a perfect golden spot to get in at. Average down if you have to, and just wait for pullbacks. Okay, now SPY and QQQ, these are ETFs that are also on CashApp, okay? And O and NLY, these are dividend stocks. Dividend stocks, they pay you either quarterly or they pay you every 3 months, okay? A dividend yield stock basically means they're going to pay you a small amount of money here and there, depending on your position, but I absolutely love 13.73 dividend yield, and they have a good operating margin, 79.23%. Compare this to GameStop. You'd get nothing from GameStop, but if you quote unquote diversify your portfolio and invest a little bit of money in this stock, right, you're gonna gain 13.73% of money, either quarterly, monthly, or I don't know, every 4 months, right? However the stock does it. Okay, now all you need is 4 stocks. Okay, don't think you need to own 6, 7, 8 stocks. No, that is too much. You're giving yourself a headache. Do your research on 1 stock, 2 stocks. That's it. Get an ETF, get a dividend stock, and keep it at 4 to 5. Okay, you can trade options. You can do all that nice stuff as well. You can day trade crypto. You can day trade AMC or GameStop. Do that stuff on the side as well. But all you need is 4 good stocks and 1 good ETF that you need to focus on. Okay, for example, a good diversified portfolio looks like this. Okay, I have Nvidia around 135 or under. Okay, that's a good position. Okay, but if you're in for higher than that, what you can always do, average down. Or what you can always do, keep holding the stock longer. Boom. Walmart under 92 or low 92. If you missed 89 on Walmart, do not chase. You can average down. Let me tell you guys something. Walmart dipped down to $89, and it was an amazing dip. Okay, you would have been making profit right now, and I guarantee it, because it's up at 92.6 on a day where Walmart is down 1.21%. You would be making profit if you invested down here at 89.24, 89.7, 89.5. Okay, 89.85. So this is an amazing thing to think about. Okay, so if you get profit for somewhere like 2 tech industry stocks, right, sell one of them, go for a different industry sector. Go for something like retail. I'm pretty sure this is retail, right? So the industry is, retailers and staples. Go for something like this, and boom, you'll be making profit from a different industry sector now. So one of my main goals is sell AMD when it goes around 180, and then look for a position in Walmart. Okay, so substitute stocks. Know what you want to do with some stocks. Nvidia is something I want to keep for a year, 2, 3 years, whatever, right? But AMD is something I do not want to keep for more than that, because I know how crazy this recent drop off was. Okay, now the SPY, okay, under 598. This is usually a long term. Don't worry too much about position. Again, ETF, put a little bit of money in there if you're young. If you want to learn more about investing, don't focus too much on an ETF. Okay, find 2 companies you really love. Do research on them. Know how to find the intrinsic value. Know how to correlate the PE ratio, right? And know that investing in a stock is like investing in a business. Do not be so focused to sell a stock if you're a long-term to mid-term investor. Be focused on how the company's doing, how much cash it's generating. Know about free cash flow, okay? And the next is O or NLY. Now, again, different color codes, because these are different type of stocks. I'm going for a quote unquote diversified portfolio. Having a diversified portfolio doesn't always mean owning 20, 30 stocks, guys. This is something you need to understand. Do not make this mistake in 2025, because one of the main things I'm saying in this video is CashApp stocks for 2025. So don't think just because number 3 says diversifying, you need to own 20, 30, 35 stocks, and then you have 1,000, 2,000, 3,000 all spread out, and overall you're making 4,000 profit, but you could be making way more profit if you just own 4 to 5 stocks. Okay, so a diversified portfolio just means get 2 industry sectors you really like, 2 good stocks you really like, get 1 ETF and 1 dividend yield stock, and day trade 1 stock here and there, and swing trade always if you like to. Okay, so really you're doing 5 to 6 stocks, but 2 stocks are substitutes. So really 4 stocks is what you're holding, but a stock like NOY or O is something you're gonna always keep in there for a dividend. Okay, but GameStop and AMC is something you're gonna sell if you see profit, because those are just stocks you're playing around with. Okay, I like O because they pay dividends monthly. If you see the stock right here, I have it in my portfolio. It's Reality Income. I only have $15 here, but look at their dividend yield. It's 5.94%. They have a good operating margin. Their PE ratio is 52, so it's not, people don't think it's crazily overvalued. Okay, that's what basically means. If the PE ratio is usually lower, a stock is undervalued. If the PE ratio is higher, it's usually overvalued. Okay, so if you look at something like AMD, a lot of people think it's overvalued. Okay, I want you guys to see something. AMD is 100 something in PE ratio. I have these things memorized, guys. Okay, 111.26. Okay, I do not like the PE ratio too much, but it is a good indicator to have. It is something to consider. 111.26. This is crazy. Okay, compare this to Nvidia. Okay, I want you guys to compare it to Nvidia. So if you compare that PE ratio of 111.26 to Nvidia, right, you see a PE ratio of 53.20. So this means Nvidia is in a better spot than AMD, and will always be like that, because I think AMD is not the best stock. Okay, it's a good tech industry stock, but Nvidia is always going to beat it. As simple as that. Okay, and they also have a very low dividend yield, whatever, but I just think overall Nvidia has just, it's always been the big brother of AMD. So what I'm going to do around 180, 170, 160 is consider selling AMD. As simple as that. Okay. Now, NOY pays dividends out quarterly basis, so not monthly. Every 3 months is where we're going to get the NOY, ticker symbol NOY, dividend earned. And dividend dates for NOY is typically in a whole year, January, April, July, and October. Okay, so if you're looking to have that in your portfolio, great. Okay, it's lower than Reality Income. Invest some money in there. And I will look forward to talking to you guys more about the stock, and I'll see if I can sell it and take my AMD position, put it in NOY sooner or later. Okay, thank you guys for watching. Like and subscribe. Please make sure to understand market trends. Okay, having a safe position basically means having your savings strong, having some money you can always lean on, because number one thing you can't do is be greedy in the market. Okay, if you be greedy, you're going to get hurt. If you get $1,000, $500, guess what? That's $1,000, $100, $500 you didn't have. So it's better to take that money than be hurt and wait for more money. Keep being greedy. Keep watching those green candles, right? And then all of a sudden you see a big red candle and you're losing money, all right? Thank you guys for watching. These are some of the stocks you should consider having in your portfolio, but Tesla, wait for a pullback. Nvidia or AMD, another good option, okay? But always realize AMD, it could be something you should always consider getting out of, okay? Thank you guys for watching. Let me know if you got any comments, questions, concerns. Mr. BuyTheDip is out.